Elon Musk took to Twitter on Sunday, and this time he wasn't pushing memes or pumping Dogecoin. He was talking inflation. Musk asked his more than 77 million Twitter followers about their inflation forecasts over the coming times, admitting Tesla and SpaceX have been feeling the heat from rising prices as of late. In today's video, we'll tell you what Elon Musk had to say about inflation in detail. But before that, make sure you press that red subscribe button along with that tiny bell icon to get updated every time we post new videos. Let's get started. Billionaire Elon Musk thinks it's better to possess physical belongings like houses rather than US dollars if you're looking to secure your wealth when inflation is soaring. The Tesla CEO shared his advice just days after US inflation hit a 40-year high of 7.9% in February. Markets are concerned about inflation given its pitfalls to profitable growth and about central banks trying to control it by hiking interest rates. Naturally, investors are hunting for the means that will maintain value best. When inflation surges, it whittles down at the purchasing power of dollars as it takes more to buy an item. However, also, assets valued in dollars could likewise lose value if a dollar is worth less. Wall Street banks will say that stocks are the best means out there. Goldman Sachs, for one, urges its clients stay invested in equities substantially, US stocks, though alongside formatting somewhere else. To Musk's point about rising prices, goods have been hitting record highs amid Russia's invasion of Ukraine. The S&P GSI index, a broad standard for global raw materials prices, has jumped roughly 10 in the past month alone. The indicator hit highs not seen since 2008 last week, before a roughly 15 dip brought prices back to further palatable levels. Brent crude oil prices, the international standard, also rose to 14-year highs near $140 per barrel in the first week of March, putting pressure on both consumers and manufacturers, although prices have cooled in the past week to trade around $105 a barrel. The consumer price indicator hit a major mark lately, as well as rising to a 4-decade high of 7.9% in February as prices for everything from gas to housing increased for consumers. This week, investors and businesses will get another data point to measure inflation as the producer price indicator is set to be released on Tuesday. Musk will probably have his eye on that figure, as price indicator serves as a gauge for changes in prices of goods and services from the perspective of product makers. In January, wholesale prices, as measured by PPI, rose 1% over the previous month and then fantastic 9.7% compared with a year ago. The latter represented the another loftiest periodic gain ever recorded for producers and is likely what has Musk feared. Musk's businesses may also be impacted by the unforeseen half of the world's neon output caused by Russia's invasion of Ukraine. Two Ukrainian companies, Ingus and Cryon, which produce between 45 and 54 of the world's semiconductor-grade neon, have been forced to halt produce during the war. Neon is a crucial element in lasers that are used to make the semiconductors, also known as chips, which help power the modern-day tech that goes into Tesla's in-auto computers and your cell phone. The loss of neon inventories will only exacerbate an ongoing semiconductor deficit that has agonized automobile manufacturers, causing repeated productions shutdowns. In affiliated news, Musk fell out of the $200 billion club in February as Tesla stock has struggled since hitting a record high of over $1,220 a share in November of last year. Shares of Tesla are down over 12 in the past month alone, and analysts, including Wedbush's Dan Ives, are awaiting the company to raise prices for their automobiles in order to pass inflation onto the consumer eventually in the coming 2 weeks. That's all for today's video. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.